On. Excited to have you on the show. We've been talking for many years now, and really excited to share your journey. For those who don't know you yet, could you share yourself?
Yeah, thanks, Jeremy, for having me. Good to be on the show. In short, about myself, I'm an investor and operator between Asia and Europe. And my story started back in 2013 when I went to Russia next to my college work to build fashion e-commerce platform Lamoda over there. Scaled it, and then in 2015 moved over to Indonesia, first as an operator with Rocket, with Foodpanda primarily, and Zalora. And then for a few years spent time in venture capital with different firms. Investing in Southeast Asia, but also have gotten exposure to the Middle East region and the Silicon Valley. And then thereafter, spent most of my time fully with Kejora Capital, one of the larger VC firms from Southeast Asia. There I launched a $30 million early stage fund in partnership with SBI Holdings. And now currently I'm a director at Rigel Capital. We are a sort of multi-stage investor in Southeast Asia and India, and at the same time a head of corporate development at Wingcopter.
Amazing. And how did you get started in technology and startups?
Yeah, I believe it was a combination of emerging markets plus growth, which we certainly see in technology. So I just like a fast-paced environment and see opportunities to build sustainable businesses. And yeah, that intersection really excited me, and that brought me in the first step to Moscow, and then secondly down to Southeast Asia, to Jakarta since 2015. So I've been now on the ground for yeah, more or less 7.5 years between. I mean, most of my time in Asia actually.
Yeah, and how was it? How did you move from Europe to Southeast Asia?
So at one point when I was in Russia, when you are in a market in general, you might want to ask yourself, is that a market I double down on? And double down on means you learn the language, you embed yourself deeper in the market, or for whatever reasons you might decide to explore other opportunities in other regions. And for me, in 2015, it came to a point that probably that region where I was in might not be the easiest to operate as an entrepreneur mid to long term. And therefore, I decided to use the learnings that I gathered over there and apply it to Southeast Asia. So I was very glad to be given the opportunity back then to move to Indonesia and build companies over here.
Any fun stories about what was it like, being an operator in your first few years in Southeast Asia?
Yeah, I was gonna say, this is definitely, if you say, what are the wins and losses that, or failures that I experienced, definitely one of the failures is during my time as an operator. So when I just came down to Indonesia, our task was to scale Foodpanda. Back in 2015, Foodpanda, a marketplace for connecting restaurants with consumers in urban cities in Southeast Asia and beyond. And it was modeled in typical Rocket Internet strategy after Grubhub and DoorDash in emerging markets. And the key differences in markets like Indonesia and other really developing countries, you need to build out your own last mile delivery solution in order to enable restaurants. So without having solved the last mile, you're not able to solve the online acquisition of customers for your delivery platform. And this is something which was very tricky for Rocket Internet, for Foodpanda to do, because essentially your riders utilize very well in lunchtime, at dinner time, but in between you will have many operational difficulties in that. So long story short, at the same time Gojek started to hit the market back in 2015, it was a time where stadiums were filled with drivers excited to join the platform, and it became quite apparent that in order to solve the food vertical, so to say, the first thing that you need to solve for is the last mile mobility, and this is something that Gojek was able to execute on in a very impressive manner. So back then, if you ask me how was the start in Indonesia, the start in Indonesia was 6 months fight against someone that was too strong for you. So it also had its ups and downs. Restructuring teams and similar is never an easy exercise. But at the end of the day, there's many learnings that came out of that period, and also how I evolved in my professional career.
It's interesting, right? Because, I think this mobility space and, the right, connection between, riders, users, and, merchants is a really tricky three-sided marketplace, right? I'm so curious, like, what would be some learnings about that three-sided marketplace? Do you think it makes sense? Do you think it's too complicated? Or do you think it makes sense, but you have to play very carefully? How would you think about that?
I think the very big lesson from the region that we see Grab versus Gojek scaling strategy. Back in 2016, 2017, the key difference was Gojek decided to commit to Indonesia and double down on the core market. And what their thesis was, hey, look, we are launching new verticals. We will offer a more compelling value proposition to the end customer. And with this fully integrated marketplace across verticals, I'm going to be able to keep that customer in my ecosystem. And therefore, I will be able to always outcompete Grab in Indonesia. Whereas Grab's strategy was, look, we have the mobility use case. We have started, we do have the food use case, and those are significant when it comes to their total addressable market sizes across Southeast Asia. So before I do too many verticals, I rather focus on the core ones and I scale them across the region. And clearly, it worked better at least because the key was you go after the addressable market sizes first and then be able to raise more capital, etc. Regardless of that, that's a key lesson. Know if you scale horizontally or vertically, but at the same time, marketplaces work. But the question is how have been the economics when I entered the market? So how much did I pay out the drivers and how much I was willing to subsidize these consumer facing? So now the big task is that to see, okay, how big will this actually become once I reduce my subsidies, once I hike up my commissions on food. I mean, we're seeing commission rates 40 plus being paid on those platforms. So it's now going to be let's say the fat of the steak is being cut, and let's see how much will remain. But the right to be there is there for sure.
And I think what's interesting is that these giants have obviously conquered their various core markets as well as the core verticals. But I think there's a lot of question in people's head, like are they really strong or are they relatively fragile, right? And I think there's a lot of different startups now that we meet them and they say like my job is to disrupt Grab or Gojek / Tokopedia, right? So how do you think about that perspective? About their fundamentals in the future?
Yeah, so let's split this into two. The first part is disrupt the disruptor, what you said. I want to disrupt Grab or similar. We're now in an interesting time because capital markets are down. Many employees or also in private markets, we have seen many down rounds. So many employees that have shares as part of ESOP programs are now coming to a realization that what used to be a maybe significant amount of money now all of a sudden got much less. So this is one of the key drivers that kicks off the next wave of entrepreneurship, and those are the ones that have built, scaled, seen without having an economic or commercial interest to stay there for the long term, and they will subsequently become and understand something that the big coloss was not able to do. Because steering a ship of tens of thousands of people is a very different beast. You're not agile. I mean, remaining agile at scale is very tough. So yeah.
Yeah. And, I think what's interesting, obviously, is that, you've been embedded in the Indonesia and Southeast Asia ecosystem for quite some time. What have you seen have been the trends that has been there over the past, 10 years from your perspective? I mean, obviously, one has been the rise of Grab and Gojek. And I think, many people outside, Southeast Asia would think of Grab and Gojek as, the most visible, I guess, folks in the Southeast Asia tech space. What else have you seen over this time period? I think Rocket Internet was very big for a time period, and now it's less big, I think, from my perspective in Southeast Asia. How would you think about that?
Yeah, it has, no matter what metrics you would choose right now, it has changed significantly compared to 10 years ago across all of them. When it comes down to the amount of VC funds available, the amount of access that we see in the market, the liquidity events at local stock exchanges. But also the situation of the markets per se, as in the improvement of investment in infrastructure. The investments in infrastructure pay off already for some businesses, especially in supply chain and logistics. We're seeing increased connectivity across the region. We're seeing a continuous rise in GDP if you're looking at the 10-year period. I mean, the region continued to further show additional points that highlight the relevancy and the excitement also for the global capital markets. And I think that's why I'm very optimistic about the region. Yeah, that's perhaps one element that's really key. So I mean, the macros have improved. The second really key is we're also seeing that Southeast Asia gets closer also with India. The markets are very similar, and the average urban consumer in Jakarta, somewhere downtown South Jakarta, is not very similar from the average urban consumer somewhere in Mumbai. And that applies also for the ones that might be in the smaller villages in Indonesia, in the Lampungs. In the Indian Lampungs, it's similar. So the macroeconomic, in terms of GDP per capita, etc. So we're seeing that those markets just come closer together, and there's this a very visible in the amount of Indian founders that are part of in the Southeast Asian ecosystem, and which is great because more diversity usually produces better outcomes. So. In a nutshell, that's probably significant changes on the ecosystem. And I'm right now in Europe, so I speak quite a bit also with investors looking more into the region. And obviously, with a population of 2.3 billion between India and Southeast Asia, with now in Indonesia, we're seeing really, really healthy quote-unquote GDP growth rate. So it's getting more of recognition on the global stage. Whereas 2 years ago, institutional investors said, "Hey, look, I will deploy in funds in Europe that have exposure in Asia, and this is how I cover the region." Now, with their second fund of fund vehicle, they might already start looking into committing really into vehicles that sit in the region, that create real operational value from the early stage to growth stage to possible liquidity events, and this is different compared to 10 years ago.
Yeah, and what's interesting is that there's a fund approach that you're talking about, right? Which is, I think, looking at trends across Southeast Asia and India. And I think you mentioned about how there are not only market similarities and trend similarities, but there are also founders in terms of the migration of flows across both regions. Could you share more about how you think about investing across these two geographies? Like, is it synergistic because, or is it, tough to do because, they're totally different countries, different regions, a lot of travel. So how do you think about that?
Yeah, it's not easy to execute. I mean, we see examples of Southeast Asian companies that try to crack India and have not been very much successful, to put it mildly. And at the same time, we're seeing the same from Indian companies looking to expand to Southeast Asia, especially Indonesia here. So this is the main connection, India and Indonesia. And the reason is that that everyone's starting to learn right now. It's not just you take that product, you launch in a new market, you hire some commercial people, and then you just scale, basically. They understand that there are still, while some nuances are very similar, other elements of the equation really need to be localized, and that's not that easy. And there's countless examples for that. For instance, in the social commerce space. So an Indian social commerce unicorn that expanded to Indonesia, and then, for instance, has really optimized on getting lots of merchants on the platform, so producers of fashion at wholesale price. And there was no curation of inventory whatsoever, but the pure fixation of merchant and inventory acquisition targets, and understanding how to curate and who to partner with, and how to manage your operations, how to manage returns, also on the product side. So there's many things that really make the cases, albeit similar, still also unique. And this is something that's not easy to solve.
I mean, it's not only not easy, right? But also, I think there was this hot trend, I think in 2020 and 2021, where a lot of Indian founders moving Southeast Asia to build, right? And to some extent, not really vice versa. I think not very many Southeast Asian founders went to India to build. And I think that's kind of reversed. I think we see that in 2022. So who do you think is going to succeed, I guess? Is it like, do you think there are going to be companies that are able to win both India and Southeast Asia? Or do you think those are like two different markets that they are just going to dominate each thing, and you're just looking at the trends that are in both markets to invest in with the thesis?
I would say the next 5 to 10 years will tell. But here's the thing. This whole concept of Southeast Asia and India, or India and Indonesia, already exists long before venture capital. So, and this is very visible in the movie industry. So if you guess, many of the biggest movie production houses in Indonesia are in fact run and founded by entrepreneurs of Indian origin, second, third generation immigrant. And the reason is, funnily, because in India there's a thriving Bollywood industry, and they have essentially taken some of those concepts, they have localized it to Indonesia, and essentially became a huge success. And now many of the largest media production houses are run based on that strategy, and we're seeing it continues now on the tech side. So what I can say for now is that we're very confident on building synergies between those markets, but are yet to see whether it's really one consolidated both markets play, or whether there's also mergers between those markets, or else. That remains to be seen.
And I think the part where it remains to be seen over the next 10 years seems to be the mantra of all VCs, right? Which is that, the learning cycle for whatever you believe or say on a podcast or tweet, it's 10 years, which is very different from being an operator, right? Which is whatever you build, you launch today, you learn straight away whether it's going to work or not. So I'm just kind of curious, you've done both sides of it, right? Being a operator and executive, fast growth startups across multiple categories, and also being a VC. Like, what are the pros and cons of both roles? Because I think a lot of founders want to be investors, and a lot of investors want to be founders, right? In terms of the operator versus building versus investing side. So what would you say are the pros and cons from your perspective?
Yeah, let's look at it. If you were binary, so you have to choose for one or the other. So on VC side, what are pros? You learn much more about many markets. Exposure is definitely interesting. Secondly, you learn instruments of fundraising, term sheet negotiations, SHA document negotiations, etc. How to close round, the structuring, etc. Thirdly, you also get to network a lot with people from different industries, so it's not just a learning, but also a networking effect. And I believe in the power of network that you build. So I think doing this for VC is definitely a good plus. So that's on the plus side. On the negative side, it depends now what entry level you're looking at. But let's say if you're looking at analyst, associate, maybe also VP level. The thing is, you get lots of exposure, you learn a lot, but the economic interest might not be aligned with the things that you put into the firm. So eventually, you realize VC is a long-term game, not just in the way that you treat your investment, but also in the way that you can commercialize your career. Yeah. So that's something you need to take into account. And then secondly, and this is then down to you. You sit by the sidelines. I mean, you can support. You can support on primarily fundraising is what you do support a lot on. I mean, what do you do mostly? You do fundraising. You do on case-by-case basis hiring. You do on case-by-case basis some form of partnerships with portfolio. So yeah, you're just at the sideline. You're not steering the wheel. So that's maybe on the VC side. On the operator side, I mean, it is a nice feeling to just look at your data studio or whatever and see this is the business that is growing each day and this is the customer reviews and feedback. If you know that you built this from scratch, it's just, I mean, it's just a feeling that the people that build companies and build, and it's great fun. I mean, the ones that haven't, it's not a shame. Everyone can start anytime in their life, but this feeling of seeing something grow and the impact of the decisions that you make on the business is just it's a different feeling. So no VC, in my view, no VC work can replicate that. But at the same time, as a VC, you can be entrepreneurial, but this is then you need to build your firm from scratch. That's a different case. But and then back to operator. So that's one, the entrepreneurial feeling. Two, it's then also I generally VC, yes, you network a lot, but it's also a lot of professional network. So the team, it's also a lot of lonely jobs. Sometimes you sit at your desk, you do your research, you sometimes speak with founders, but it's all very professionally. I believe that it's harder to replicate the elements of company culture and bonding and similar in a VC firm than it is in a company setting. But that might also be due that in what stage of the cycle you're in as a VC firm. So that's probably on the pro side. On the con side, well, I know. Thirdly, and that's important, you have all your eggs in one basket. So I mean, should you be having equity interest in the company that you work with, and it goes well, obviously it's a nice opportunity for you. But on the other hand side, being an operator also limits yourself to one industry to some degree. So you become more specialized. So you would need to make the decision if you want to do that. So that's a little bit my view here on pros and cons.
And how would you help someone understand, because I think what you're sharing is like the pros and cons, right? But how does someone figure out whether they actually like it or not? Should they just take the job on the other side of it, or how would you advise them to discover which one works out for them?
I mean, if it's like, if you're looking for entry level, or let's say you just graduated recently and you don't really know yet in what direction you would want to go, the best way is to do internships and try, and dip your toes in the water. And this can be internships, this can be talking to people in the industry, this can be speaking to people on LinkedIn that you give good context on why you're reaching out to them, what you're expecting out of building this relationship, and how you can maybe also perhaps contribute to their professional career. So there's many ways that you can prepare yourself to dip the toes in the water.
Yeah, and what's interesting is obviously you've done both sides of the table, and I think there's always this question, right? It's like, do you have to be an operator to be a VC, right? And of course, I think the research goes both ways, right? Some papers are saying yes, it helps. Some people say it doesn't. How do you think it plays out for you personally?
I mean, it's funny you bring this up. I just saw a statistic from Europe from last week. The share of people in partners in VC firms with finance background is more than half. So that this is how much as a VC should have been an operator prior, where you see that a VC industry which is larger than Southeast Asia, in fact, is still very finance oriented. At the end of the day, I believe in diversity. You cannot just have operators to VC and not the financial expertise and vice versa. Only with a diverse team with different backgrounds, those bring the best results that are uncorrelated to any market. And I think this is something, and in this context, of a diverse decision making, I believe an operator can show empathy with the founder. I believe that's one of the really core capabilities, because if you've been through things, there's just a different level that you talk to founders.
Yeah, and could you share a little bit more about, from your perspective, empathy for founders, right? From the VC perspective, I think it's tough, right? I mean, from a VC perspective, you're seeing thousands of founders come through. You're going to say no to most of them, right? And, frankly, as a founder, I've also met lots of VCs that I don't think, display any empathy for me, I think, in my situation. So, I'm sort of kind of curious from your perspective. I think every VC says they want to be having founder empathy, but I think if you ask most operators, I don't think they see a lot of that from the VC perspective. So it does feel like there's a mismatch between what people say they do versus what they actually deliver, or maybe what gets received. So what do you think is that discrepancy, or what do you think is that difference from your perspective?
Yeah, I mean, founder empathy is to be shown throughout the entire process, right? It's also with every single founder interaction that you have, that you show understanding for situation and respect, and but also then in the interactions with the founders, empathy is key, and I try to manage it with founders. Of the way that I really do it is, I try not to 5 years ago meet every day 5 or 6 different founders and, let's say, screen the market like crazy. So I just feel that this way of venture capital is not the way that I believe VC works. It's not like, hey, speak to like 1,000 companies and then curate the funnel and have a very like analytical mindset on it. But it's really the way that I do it is, I choose a few projects that I do, maybe also just an idea, then bring co-founding team together, and then we go. So, or I think about more, not that I look at my inbound deal flow, but I look more as in, hey, based on the current ecosystems and assets that I have, what could be complementary and possibly synergistic to the portfolio that I have, and thereby just scale much faster or be more efficient. And thereby, with this mindset, I limit the interactions that I have. And then if I do have a deeper founder interactions, then those are very significant. So calls at least on a weekly basis, and lots of also other initiatives we work on together.
So, from your perspective as well, could you share with us about a time that you've been brave?
Yeah. So what I was really say is, when I was brave is when I jumped into the venture capital industry. So I shared earlier about my time with Foodpanda. I just arrived in Indonesia from the almost North Pole in Russia down to the tropical Indonesia, and I had this roller coaster ride with Foodpanda. And then about 1 year later, I was just sitting in the plane and told now to invest for Global Founders Capital in Southeast Asia. And I haven't had any clue on valuation, on term sheets, on any of these things, and was really thrown in the water. And I feel, even though I didn't know, I was just brave enough to commit to this challenge, because I believe this mindset of going in the water and seeing if you can swim is a very, very, very important quality to have. And this is why I feel I was brave that I have done that, taken that challenge. and it brought me to where I am today. So I'm very grateful for having been able to go through that back then. Yeah.
What was your reason behind making that switch, right, from the operator to VC perspective, from your personal perspective? Why did you want to do it?
Yeah, I mean, let's face it. I mean, I was like 23, and you work and you go to the warehouse each day somewhere in the outskirts of Jakarta, and you really, I mean, it's heavy work, which I also like and I enjoy. But then if you were given the opportunity to explore venture capital side and do investments, and it's I mean, it was hard to say no to that. So I gotta be honest. So for me, it was a little bit run by accident. It's not that I applied or something. I just got a call one day, and then I just said, okay, I'm gonna come to London for a week, and then let's go. So it was a bit run into venture capital by accident, and then yeah. But by now I really stay on the intersection. And also the way, given that Rigel Capital is still quite new on the market, it's also very entrepreneurial itself. Because building a VC firm is a completely different ballgame than building a startup also.
Let's talk about that, right? So what's it like to build a VC fund? For a lot, very few folks have been, operators, even fewer folks are VCs, and even fewer folks are building an operator and building a VC fund. So what's so hard about it? People are going to ask.
Yeah, let's put it this way. Broadly speaking, what makes it so hard is the high entry barriers to get a fund up and running, at least in Southeast Asia still. And these entry barriers are because you have to do a lot of documentation. Takes about 3 to 6 months with a team of at least 5 full-time people. So you can imagine the financial resources. Then you would need to set up structures and similar. So there goes another 100K, 150, 200K, depending on the setup, advisory. And then you have all the investment you need to do to raise your fund. Provided you have a track record and you have exits, and all of this is we assume as a given. But then you can assume that the cost to fundraise a new VC firm, and if you're looking at about 10, 20 million, it's going to be a bit of money. Yeah. Also, if you were to raise this with small checks, it's going to take a lot of your time also. So the reason what makes it so difficult, very few people have the means and resources to really enter that industry. It's quite tough. When you launch a new VC firm, the first thing that you got to do as part of your documentation is going deeper in your strategy, your positioning, the next fund that you're planning to raise, who are the possible interested investors you want to talk to globally, what are the global macro trends that drive investment in the region. Right now in Europe, commodity prices grow like crazy. Early next year, FMCG prices will follow. So it's going to be, and we're going to have massive inflation. So obviously, you're looking at those global tailwinds where you can go into and pitch an exciting growth story in a diversification of your global asset portfolio strategy. So that's in a nutshell what needs to be done in order to set up a firm, and what is the focus also when you do that.
I think part of it is like you're talking about raising money from the limited partners, obviously, and you're also talking about building like a deal funnel. So what would you say are the things that you need to build within the fund itself as a company?
So obviously you need to show some if you want to raise a fund, what you need to show your team, you need to show your investment strategy, some details on why the market is growing. You need to show the details on the fund and the structure and the commercial details of the fund. And you also would need to show an overview on the verticals that you cover, but also then some exemplary deal flow. Having said that, though, You don't want to spend too much time or too much of your time on deal flow, because it might be that in 6 months when you close the fund, some of these opportunities are already gone. So you got to find a bit of a balance between how much of my time I dedicate to deal flow in a stage where my fund is not ready yet. That changes once the fund is launched.
So, for people who want to build a VC fund, what advice would you give to them when they set out to do so?
Yeah, look, it was actually the same that I asked myself like a few years ago. So I want to get exposure to as many companies and projects as possible, but I don't have money to invest on millions of dollars. Yeah, so I asked myself, hey, how can I build myself direct equity positions in companies without essentially having the financial resources to do investments at scale? And so what I did is I started to do advisory. So I started to raise money for companies. I started with a $1.5 million seed round in Germany. I continued with a $42 million Series A extension from Wingcopter. And then sometimes those advisory relationships also turn to something more significant. But the key here really is it gives you track record. So if you're looking to build a VC firm, first thing that you need to solve for is, okay, do I have relevant track record to convince investors to trust me their money and believe I'm going to generate good returns for them? And you need to show to them that through advisory or through your personal investments or else, you do have the capacity to do so.
I mean, that's a tricky part, right? How do you balance your time to do so? Yeah.
Can you just
lots of different roles, or do you? Yeah, do you take on a few of them? How do you balance, all these advisory roles, and obviously staying an operator and as a VC, so on and so forth?
Yeah. So I don't do any advisory right now, but this is how I started. Right now, I really focus on my 2 projects, and I'm able to do this because there's many synergies. At the end of the day, I'm just meeting so many people, and oftentimes one project might be more interested for the others, and so on. So this is why that setup works. Generally, if you do advisory or others, see what you can contribute at the end of the day. Is it fundraising or else? But also taking a little bit zoom out of that view, the key message really is, if you want to launch your own VC firm, think about your own track record. And if you don't have your own investment track record yet, thinking about creative ways to build it next to investing, and one of it is advisory. And this is how I did it.
And obviously you started talking about like investor track record, etc. So how should folks think about their own track record? Is it a function of good deals, bad deals? Is it a track record in terms of founder reputation? How do you think about investment track record? This is a very fuzzy term, right?
Yeah. So you look at all the money that you have invested in your personal capacity or on behalf of venture capital VC firms or else. Then you look at the current estimated net fair market value of those positions, and you see if you have generated returns from your initial investment cost. So the way that you should think about track record is your multiple on the investment capital, your cash on cash returns, have I given money back? It could be founder NPS. So if you have NPS survey or similar, and how happy founders are with working with you, you can do that. It can be just founder statements and quotations. So there's quantitative and qualitative metrics you can use in order to give better perspective on your track record.
Yeah. Awesome. So thank you so much for really kind of sharing so much. I love to kind of paraphrase the 3 big themes I got from this conversation. I think the first is thank you so much for sharing about, I think, Southeast Asia, some of the historical trends that you've seen as personally as an operator and VC, and of course the cross-pollination that you see of India as well, and why that's led you to want to put together this thesis around building a VC fund that covers both of these regions, even though it's to be determined whether it's one player winning both markets or whether it's one player winning each separate region. The second, of course, is thank you for sharing about the operator versus VC career, some of the trade-offs, the benefits, the cons. and also how to go about exploring those two careers. And lastly, thank you so much for sharing your own personal experience about building a VC fund from scratch, which lets you be an operator in terms of building a VC fund instead of a startup. So thank you so much for your advice there.
Thank you, Jeremy. Thank you for having me.